a week ago, this time, the market had a 40% priced in odds of a rate drop tomorrow, June 5th, and a 70% chance of July. But because Stats Canada released updated GDP per capita figures last week and showed that we are negative and slumping and continue to slump and lead the G7 with, the worst per capita GDP numbers, that the market is now 80% odds of a policy rate drop June 5th.
You're listening to the Ottawa Real Estate Podcast with your hosts, Paul Stevenson, David Warren, and Greg Campbell. Let's see what's going on in the world of real estate today.
Welcome back to the Ottawa Real Estate Podcast, hosted by me, Paul Stevenson, along with my incredible colleagues in real estate, David Warren and Greg Campbell. Whether you're a seasoned investor, a first-time homebuyer, or simply curious about the Ottawa real estate market, this podcast is your go-to source for expert insights, tips, and the latest trends. If you haven't already, make sure to subscribe and stay updated with our weekly episodes, and be sure to follow us on our social media channels for exclusive content and behind-the-scenes looks. We're committed to providing you with the tools and knowledge you need to navigate the real estate market successfully. Do you have questions? We're here to help. Reach out to us with any real estate inquiries you might have, and we'll be happy to provide you answers and guidance on the show. Thank you for tuning in. Let's get into this week's episode. What do you think, gentlemen?
I wanted you to say, at the end, I wanted to say thank you and have a great day. Show's over.
That's
over.
Yeah, that might be a little too static. We're going to get it, though. We got to find the right range. I think we need maybe Greg's voice or someone that has a little more sultration.
Sultration?
It needs to be sultry. A little sultration in the voice. Yeah. How you guys doing? How was the weekend? How's the week? What's happening? Sun's shining. Summer's here.
Sun has been shining this weekend.
Last weekend was fantastic. It was fantastic. A little bit of work, a little bit of family. Typical. Showing some homes, showing some duplexes in Vanier.
Yes.
Oh.
Yeah.
The French Quarter. The French Quarter is
one potential. Three others, not so much. Went into one unit of two or three, or depending on duplex or triplex, and just went into one unit and immediately turned around. And we were like, that's the end of that adventure.
Yeah, it's funny how that happens, eh? Photoshop is a beautiful thing. You show up and you're like, oh, yeah, okay. I see how they took the photo, but not quite what we were expecting. Same angle, different shot. Yeah. Some good stories, some sad stories. Duplexes and Vanier. I have a funny story, Greg. I kind of mentioned this to you yesterday, but I had not yet a client, but a listener reach out from Boca Raton in Florida. Says he listens every week, American citizen, lives in Florida, grew up in Florida, never doesn't live in Ottawa, has never been a Canadian citizen. Him and his wife are considering moving to Ottawa just because of listening to this show.
Which is insane.
His wife left Canada at a young age. I won't name names. I specifically asked not to name names, but that he was hoping it might make the story. But he said he listens every week, loves it, and they have some family in another major city, so they're going to visit them, and then they're coming to check out homes in Ottawa. So who knows? We might just be driving immigration, guys. We might actually be part of the problem here.
Trolling the market once again.
Yeah.
Here we go.
And by problem, I mean overpopulation, not immigration itself. Obviously, Canada's built on immigration, just to be clear here.
Yeah, I like that.
Great.
It's a good story. And what about you, Dave? What's new in your world?
In my neck of the woods? Nothing much. Just kind of things kind of humming along. I was with a few lenders last week talking about kind of, they've been seeing the same of just ebbs and flows of the market. Picking up, then slowing down, picking up, then slowing down, kind of that kind of turbulent, if you will. Turbulent is whether that's the right word or not.
Turbulent and volatile.
Yeah. So, it was kind of that conversation. Yeah. Of that starting from January, like right out of Christmas, that there was periods in January that we talked about where it would pick up for, 2 weeks. You think it's going to be
we're back
hectic and then falls right off. And then 4 weeks later picks up for 2 weeks and then kind of falls off. And I don't mean goes to zero, but and it's been up and down, but it's been even up until last week, it's been really interesting, and really nobody been able to read what is going to, come with the Bank of Canada rates and, policy decisions and all that, where a week ago, this time, the market had a 40% priced in odds of a rate drop tomorrow, June 5th, and a 70% chance of July. But because Stats Canada released updated GDP per capita figures last week and showed that we are negative and slumping and continue to slump and lead the G7 with, the worst per capita GDP numbers, that the market is now 80% odds of a policy rate drop June 5th, tomorrow, or today, I guess, when this airs, which is a very interesting change. And then because of the numbers coming out from Stats Canada, we've seen the bond market reflect that with a 25 basis point drop in the last 5 days as well, which, as we keep talking about, affects fixed rates. But obviously, as news like that comes out, the odds of Bank of Canada doing something, those change, but then also the bond market reflects, some of those changes as well. So that coming down 25 basis points is pretty big drop. And I know, Paul, you were just mentioning before we came on, it'll be really interesting if, we have the Bank of Canada make that rate decision, 9:45 a.m., which will basically be the same time that this episode comes out. So as this is coming out on June 5th, this episode, Bank of Canada will be making the decision or announcing it. And it'll be interesting to see if it coincides with, if they make a policy drop and the fixed rate keeps going down, or bonds keep going down, that we also then see a fixed rate drop. It's going to be like, headlines will be all over the place. And as far as positivity, kind of breeding that positivity that we keep talking about. So it'll be, I think, that very interesting week this week.
Yeah, it's
Buyers
still very
swarm back to the market, driving prices up, up, and up. They will not come down. Buyers swarming to the market. Sellers living new lavish lifestyles.
Get ready.
Leaving the country. Swarming buyers. Lavish luxury.
Is this a police call? Swarm.
I don't even know. I just like using the words lavish and swarm.
Oh man.
Oh,
that'll
God.
be pulled. That'll be pulled for sure, as far as like key highlights from the show. Buyers swarm. It's gonna be high. Ding, 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 ding. Shocking news out of Canada.
Society is in shock.
Oh,
as buyers swarm back to the market, prices soar.
The SEO on YouTube is just going to be like
sellers dancing into their next purchase, where they are swarming to buy homes for higher prices.
I'm still to that point. I'm still having conversations all the time with people telling me directly, we're waiting till June to see what happens with rates. Yeah, like it's actually like in their head. And I think it's just one of those things where, like, I'm a sports fan. I don't follow tennis, for example. Someone tells me, Pete Sampras, top tennis player. Like, all right, great. Like, it's kind of it's an auxiliary information that you just kind of take it as fact. Like, oh well, Greg probably knows what he's talking about. I guess rates are coming down in June. Let's wait. Like, it's like they don't do that one extra step to just Google it or like see what the impact is, or listen to tow rep. And get the insight. But yeah, I think a lot of people are waiting. And again, funny enough, as you said, Dave, bond rates coming down, the fixed rates may actually drop as well. So that would actually be like just doubling down on the rate drops.
So I did some numbers, like some calculations a week ago that kind of just speak to, people like you just mentioned, like the correlation of Bank of Canada dropping by a quarter point, in their mind, fixed rates are going to drop a quarter point. And so I did kind of a breakdown looking at if the rate were to drop a quarter point on fixed and even a further quarter point, and making an assumption that it's probably going to bring people back to the market and values kind of going up slightly. So a purchase price is 600,000, which is below the Ottawa average. Minimum down payment would be 35,000 at a 5-year fixed rate right now of 4.99. Your payments would be $34.14. Let's assume that Bank of Canada and the fixed rate are directly correlated and rates come down a quarter point. This hypothetically increase, there'd be likely a drive in demand. And let's say it's a 5% increase in value of properties. an extra $30,000 would be added. So your new purchase price would be $630,000. It would actually increase your down payment to $38,000 as a minimum. The rate would be now 474. Let's say that they're directly correlated. Your payments would actually be higher, even at $3,490. So you'd actually be higher by, $76 a month. Now let's say that rates come down another quarter point to, again, Bank of Canada, fixed rates directly correlated. So let's say that happens, news, in another quarter from now, more people come back, positive news. It's now at 449. Let's say that rates increase a further 10%, further 5% rather, from the original purchase price. So we're now at 660, a purchase price, which is, keep in mind, this is still below the Ottawa average. Minimum down payment's 41,000. So your down payment has now increased 6,000 from original. Your rate is a 5-year fix at 449. Your payments have increased again and it's now $3,559. So you've increased a further $69 from before. So from the original, so if you bought at 600 and a 499, your payments would be 3414. If you waited for a 0.5% decrease, and this is all, this is obviously a hypothetical, and rates increased over that period of time by 10% from that original, your payments would be 140, what am I at here? $100, $110 more than if you had bought previously. So your down payment's up by 6,000, and your payments are up, and you're paying 60,000 more for your property. So
that's an extra 6,600 in payments, just on payments alone over 5 years.
Again, this is, the value increase or the purchase price increase is, is obviously a hypothetical, but all we've constantly seen in the Ottawa market is that when rates decrease and positive news comes out, that buyers come back. And just like you were saying, Paul, and I think there's a lot of realtors on this that listen to this. I think there's a lot of mortgage agents that listen to this podcast, and a lot of the public that listens to this that are thinking the same way. That, on the agent and realtor side, when rates drop, people come back. We saw that during the pandemic, obviously, and rates jacking up or values jacking up. And there's a lot of buyers that are listening that, typically think and don't necessarily listen to this, but just read the headlines, we hear talk about it, that they're waiting for rates to drop. Well, you're sitting on the sidelines. There's others that are in the same boat, to the tune of thousands of others and even tens of thousands. So, it's not inconceivable that over, let's say, a 6-month period, that the home prices go up 10% from that original 600,000, and that's based on 0.5% coming down because, it's likely that the Bank of Canada will drop a quarter point every quarter. So I don't know. I thought that was interesting, breaking down the numbers of how it actually negatively affects buyers by sitting on the sidelines and kind of not thinking about buying for what you're needing for housing.
Yes.
And needing for your, for right now, if you qualify and the payments right now fit your budget, the rates and the terms can be temporary. Like you can get a 3-year
Date the rate, David. The rate.
You can get a 3-year insured fixed at 499 right now. Like, I did it on 5-year, but you can get a 3-year at that. So for an insured 3-year fix. So, you can just do a temporary, like a short term, and save yourself tens of thousands of dollars in not only just the value of the home or the purchase price, but also save yourself on down payment savings and save yourself in payments. But
and think about it, buyers. If you were buying something now or within the last 6 months to 12 months, and this rate drop does increase prices, you have a higher property value. You just made some money on your investment. But instead, as rates drop, prices soar. Buyers swarm the market.
Oh my gosh.
oh Jesus.
I have some funny, well, not funny, actually. Greg's funny. Not funny at all. My what I'm about to say. That word was in my head.
Let me not laugh, Paul.
I have some bullet points about why the Bank of Canada may cut rates and why they may delay cutting rates. You guys want some high level high-level bullets.
Enlighten us.
Let's
So
delve.
Now, funny enough, when people hear this, it will have already made their announcement. So it's going to be great to even hear this after the fact. So reasons why they may cut rates. So softening inflation. Dave, you mentioned that. Sluggish economic growth. So Canada's GDP growth flatlined in March, resulting in slower than expected growth rate for the first quarter. Together, this indicates underlying economic weaknesses and removes the last potential barrier preventing the Bank of Canada from easing off the monetary policy brakes. Rising unemployment. So unemployment rate rose to 6.1 as of April from 5% a year ago. Household debt relief. So lowering interest rates would reduce the debt servicing costs for households, providing relief to consumers and in particular mortgage borrowers. It says with 76% of outstanding mortgages expected to come up for renewal by the end of 2026 and payment shock expected to lead to a rise in mortgage delinquencies, the longer rates remain elevated, the more financial strain households are likely to experience. On the flip side, reasons why the Bank of Canada may delay cutting rates, which we'll talk after. Canada's tight linkage to the US. So Canada's economy is closely tied to the United States, its largest trading partner. Significant deviations in monetary policy between the two countries can have substantial implications for the Canadian economy. While the US Federal Reserve has compelling reasons to maintain its rates for a few more months, high inflation and robust job market south of the border, the Bank of Canada has to carefully consider the potential risks of diverging too quickly or too drastically from the US policy. One major risk of the Bank of Canada moving ahead with a rate cut too soon is a potential depreciation of the Canadian dollar. While a weaker dollar might benefit exporters by making Canadian goods cheaper for foreign buyers, it can also increase the cost of imports, fueling domestic inflation. Next bullet point, Tiff Macklem's own guidance. So as mentioned above, Bank of Canada Governor Tiff Macklem generally tends to provide forward guidance to markets ahead of key shifts. He's also extremely conservative from what we've seen. Like he likes to have an abundance of data before making any moves, unless it's up. So, I think there is like a good argument that he may hold till July and then drop in July. But again, it should be one of the two. And then the last bullet point, the benefit of additional economic data. So delaying a rate cut until July would give the central bank the benefit of an additional month's worth of economic data, as was just mentioned, which I think realistically, the way they operate, it seems like they're like, well, things are looking promising for a July cut, but we need to assess more recent data on key indicators. I feel like that could easily be the announcement as well. So one last thing I wanted to say, there's a good chart here, and I'll make sure Stephen posts the link to this article. It says the latest big bank rate forecasts. So I'll just go through them quickly. So the current target rate is 5%. Target rate for year end 2024, Bank of Montreal says 4%, so full 1% drop. CIBC says 4%. National Bank says 4.25%. RBC 4%. Scotia 4.25%. TD 4.25%. So even the most conservative are still pricing in 3 drops this year, 3 rate drops, or 0.75%. It could be 2 drops, 50 and 25, but either way, 0.75% is still the most conservative of rate drops. So, we have five announcements left, including tomorrow. So I would guess it's going to be definitely June or July. And then, like you said, I think Dave earlier this year, that we'll probably see some at the tail end of this year after seeing what the impact of this first rate drop has on the economy.
I'm really just hoping for a June rate drop so that I can go back. We can have Steven replay clips from last November, December of the prediction of June, which we were getting so much flack for in comments and everything else, to basically go back and kind of be one of those of like tagging those people of like, hey, did you see this? Anyways, that's just my own. That's not really the main reason why I'm looking for a rate drop.
Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction. At Geltin Poirier Avocat Lawyers, we love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you. For an effortless client experience that opens doors, call us at 613-744-4488 or visit our website at geltinpoirierlaw.ca. Let's get to the heart of your deal.
Are you trying to grow your mortgage business? Centum has the tools and support to help you take your business to the next level. Get access to everything from free unlimited custom marketing to daily direct pay. Find out what your business can do with Centum. Learn more at joincentum.ca.
Well, speaking of the market, there was a segue in there somewhere, Paul.
Speaking of real estate,
it made me think of where I wanted to go next with this. The very interesting numbers in terms of new listings. We now have the most new listings on the market since the same time in 2018 by a few hundred.
The
Probably
old
about,
world.
Yeah, anywhere between 300 and 500 over the last couple of years. So again, that says a lot. That says that the buyers, you are in the driver's seat for most of the transactions right now.
Mhm.
Because of course, if you wait for the rate drop, prices soar.
Swarm.
Buyers swarm back to the market potentially. So I like shopping now. There's a lot of opportunities. There's a lot of properties that are just kind of sitting, although days on market is, let me just see the days on market data here. We're averaging. So again, this is greater Ottawa as a whole, every type of property. We're averaging 16 days on market right now, which is, I mean, that's amazing.
pretty low.
Actually. That's very low.
I think the last time we actually marked that, it was over 30.
Yeah, I'll tell you right now, in January it was 42 days on market. February was 20, March down a bit. Yeah, I mean, and this is, and again, this is in general. So as I always say, make sure that you talk to your professional and check the specific market that you're looking to buy in, because it could be very different. It could be anywhere from the 16 to maybe 45, depending on where you're shopping. So that's great. We're still doing it. Total sold. We sold 1,567 units in May. I mean, there was way more sold over the last, even 10 years. We've sold the least amount in May than we have in the last 10 years in Ottawa. And the prices and the listings are up. Now, the average sales price, if we're going by averages right now, is basically the same as it's been at the same time for the last, for 2023 and 2021. 2022 was obviously the shit show that happened here across the country. The shit show. And, prior to that, we were, the market was just way down. So, we're still on track. We're in the same place, basically. So, it seems like it's a good, healthy market. Although in general, if you ask most realtors, we are all much slower than we usually are. There's not as much happening from who I've spoken with. I'm sure there's, just like there's different neighborhoods that will sell more. There's different real estate teams that are probably, selling more, 80-20 rule. We're doing okay, but we're a little bit behind what we normally are. So you just kind of go with it. And then of course, are we waiting for the rate drop? Is the market going to explode if the rate drops? I mean, I don't think so. I think buyers will be more cautious. This is my personal opinion. I don't think the buyers will swarm back, even with the comments. I think buyers are going to be way more, what's the word I'm looking for? Oh my goodness.
Timid?
Reserved?
Way more. That's a great one. Buyers will be more reserved and they'll make sure that they're doing the right thing as opposed to just jumping in. There's so much information now. And, but again, we want to make sure that they're buying to stay, not to play this game of this lottery that some people think exists, because it really doesn't, unless prices soar.
Yeah, I think
unless it happens the complete opposite.
Unless everything I just said doesn't happen.
we had
people doing the right thing for themselves.
Yes. We had a comment on last week's show. Great show, by the way, gentlemen. Let's do it afterwards. And Natalie and Michelle had some great stories, but also awesome knowledge and experience. And it was a really, really interesting show. Lots of knowledge shared.
And that reel we got, wow, that's short. That was
wild. It was. So B. Charon. Shout out to B. Charon. So did you guys touch on the upcoming 10-day cooling off period for new home buyers in Ontario? And I know we kind of touched on this before. So this is an article from end of May. It just says Ontario announces 10-day cooling off period for new homes. In a bid to enhance consumer protections within Ontario's real estate sector, the provincial government has introduced the Home Owner Protection Act 2024, which includes the introduction of a 10-day cooling off period specifically targeted at newly built freehold homes. This proposal aims to provide buyers of newly constructed freehold properties with a window of time to reconsider their purchase decision without facing any penalties or obligations. This on the advent of 30-year amortizations for first-time home buyers of new builds as well. Worth mentioning. Greg, you had some more data on this. I think.
So I'll tell everybody what this is because I think a lot of people think that this is just a completely new thing, but new build condos will have the 10-day cooling off period when you buy a new build condo, and freeholds will have whatever cooling off period you have in the contract. If there's not one in the contract and you're not represented and don't know about this, if you sign the paperwork and there's no cooling off period for a lawyer to review, that's a firm and binding deal. Most builders will have anywhere from 2 days to 5 days to 10 days. But what this new law is that it's mandatory that all builders have the 10-day cooling off period. So it's great. And it makes sense, but a lot of builders do already have it in place. It may not be 10 days.
Mm-hmm.
So that's all that it is. It's a nice bonus for new build freeholds. Long overdue.
Not that this would go over well in Canada, but Sandra was telling me that in Colombia, when they buy properties, the day of closing, the buyers actually get a full walkthrough of the property prior to taking possession to make sure that everything is actually sound, exactly how you wanted it. Like I know in your contracts, Greg, it does state the house has to be left in the same condition that it was, that the buyers saw, room clean, etc. But let's be honest, there's a lot of people that don't do that.
No,
like I think we're all not in that category. Like we actually do like a deep clean prior to leaving, just so it's nice. You want the people moving in to enjoy their space and so on. But it's actually mandatory to do a walkthrough with your realtor prior to closing. Now, having that in Canada with the typical, unless you're working with an excellent real estate firm like Gertin-Poirier, sometimes you only get your keys at 5 p.m. So having that additional delay, I think Dave, we talked about this actually when we were at dinner.
I was going to say, is this deja vu? I think we talked about it I think we talked about it last episode. Like New Brunswick has it.
It's New Brunswick, yeah.
Oh, yeah. So maybe that's where what set the conversation.
Yeah,
so,
you weren't here, Paul. You weren't here.
Yeah, I heard this somewhere.
Last episode, Paul.
No, but we did talk about it, and there it is.
It at length.
Yes. Great show, guys.
Thanks for coming out, Mr. Stevenson.
Great idea. We should bring that to Canada. Oh, it's here. Wow. Great minds think alike. Mood boost?
Oh my God. What else? What else do I have? I don't have anything specific. All I'm saying is just like we say, if you're ready to go for it. There's opportunities right now.
Yes. Some very beautiful homes available currently.
My team is ready to help you with a simple call. Give us a call.
To swarm in.
We'll get on a consult, a discovery call, and help you with all your real estate needs. As long as you can handle a little bit of comedy on the side, we'll have a great relationship.
Greg's the new ShamWow guy for real estate.
I don't know what I am today, but I'm just maybe it's just this new light. I can't believe this room's actually going to be finished in the next couple of weeks, so I'm pretty excited about it.
Yeah, the light's looking good.
Yeah.
You look very angelic.
I try to be. It's my goal.
This might even be Greg's AI. It might not even be Greg. Greg's on that AI tip. It might just be his avatar.
Hold on one second. Before we get off here, people, if you're listening, stay on.
Stay tuned.
The bank AI thing.
Oh, yeah. Yeah.
Delve into that a bit, Paul, because I have some thoughts on that.
Yeah, well, it has
that article there.
I'll grab it. Yeah. So basically, this was something that I was looking at the top 100 companies last year, tech companies in Canada, and on that list was this company. Oh my gosh, I wish I could remember the name. Oh man, I'll put it in the chat. I'll find it. But it was basically a software that they were using to use AI, like artificial intelligence, to underwrite for lenders. And now there's an article that I sent you guys that TD, RBC, like a lot of these lenders are now using this kind of AI technology to speed up mortgage application and code development, it says. So I'll just read you a snippet here. It says, Canada's second largest lender is using generative AI to help customer service agents answer client questions more quickly and help engineers speed up their code development. It is also using machine learning to pre-approve mortgages and home equity lines of credit and improve term life insurance within seconds for straightforward applications. Key point there, straightforward applications, which is 0%. We're looking at all the ways we can help our colleagues. We're excited about these human augmentation opportunities where we can make the roles more interesting and quicken up our responses, which gives us better customer outcomes as well. Let's see, Royal Bank, TD, and Bank of Montreal all ranked in the top 10 banks for AI innovation, according to an Evident report in April, and all three were among the top 10 patent filing banks. RBC ranked second for AI research papers, and TD was fourth. There's a whole long article. I'll make sure to post it, but yeah,
it's a little. I personally think it's a little soon.
Yeah. Oh yeah. It's just it's there.
Like, there's so many things that can go wrong with this right. Like now, in a few more years, I don't know. It's just
so there has been like some automated AI underwriting already being implemented. There's a few monoline, so mortgage focused banks that already on the lender side use AI for auto underwriting, auto adjudication. So, their pre-approvals are auto adjudicated as long as they fit the certain parameters based on like the insurer guidelines. So as long as it fits the guidelines, credit is there, income is there, all of that is straightforward. It's able to underwrite and provide that pre-approval, let's say, automatically. CMHC and Sagen and Canada Guarantee, the three mortgage insurers, use a lot of automated underwriting. So if it's a straightforward deal that doesn't require an escalation, but what happens is when it hits their systems, if it's very straightforward, meets their criteria, it's able to push back response to the lender right away. It's obviously on the lender side been gone through on the lender to make sure it hits their criteria as well. And they have to obviously verify documentation and supporting documents and all that. But when they send it through to the insurer to get their approval, a lot of times that is automated, but they do get flagged a lot of times because, like you alluded to, Paul, not every single one is straightforward. And there's a lot of oddities nowadays, whether it be something in someone's credit or et cetera. So it just flags it for a manual review. But there is quite a bit of more of innovation on the AI side from, like, as of right now. The big banks, I find, obviously are slower to adopt things from a technology standpoint. And they obviously have their big machine that they can't risk messing it up. But I think, to your point, Greg, that some aspects are certainly not developed enough or further far along enough, at least that I would say. But I also don't know that world enough, so I can't speak to it.
My main fear, I think, is just people's files getting mismanaged in terms of like where it starts, and then the follow-up not happening based on a trigger from their profile from the AI underwriter or something. You know what I mean? So there's not even an extra conversation about the process. And I'm just speaking how I feel about it. Maybe I'm completely off, but it's just like, I don't think that the machine, I mean, it's very intelligent now, but I just see little mistakes. So I love the idea of it because it's very helpful and you have to be able to work with it. So as long as it gets to the right person and it can really delve into the world of the applicant.
Yeah, even if it just scrapes all the data and says, like, here's the X, here's
further
have the debt ratios,
investigation required kind of stuff. I just feel like a lot of people are just going to get chopped right from the beginning. Yeah. For those who are working with that system, for the people that aren't just going into, or speaking with someone like you guys and doing it that way, right? I don't know.
So something a lot of people don't know too is that the European Union recently, it basically gives you the option to opt out of AI training with what you post on Facebook. So basically anything you post on Facebook in Canada and the US, AI tools, AI bots and so on can use that data to basically train itself to be even smarter. The European Union actually gives you the option to opt out of that so that they can't use all of your, metadata basically to further improve itself. We don't have access to certain news sources, but we can help AI train itself. So that's important.
And the other thing too, man, there will be hacks. There will be things that go on with this, like for years.
I think that's going to be the biggest barrier is that most people are not going to want, like, they still know, okay, I'm giving my T4 and NOA to David Warren or to Greg or to Paul or whoever, and putting that into a system that's putting it who knows where on who knows what server and where it's going. I think, as you said, Greg, is going to be, a step in the wrong direction. But let's be honest, eventually all information is going to be accessible by everyone.
Don't speak ill of Skynet. It'll get you.
Yeah, sorry guys.
Right. They're already
all your thoughts,
all your thoughts, data.
Anything you've ever thought or written down.
In the US, May 7th, 2025, the real ID is initialized. Basically, if you don't have that, you are not doing anything, apparently. So that's coming to Canada too, I'm sure.
We should probably get to mood boost before Greg goes down a rabbit hole right now. I can see the
Buyers.
tinfoil coming.
Hey, Greg.
He's unraveling the tinfoil
I'm ready.
underneath the camera.
Out of my cold dead hands.
Look, I'm a blur now.
Yeah,
Something's going wrong.
yeah. They hacked your computer, Greg. He's getting sucked into the vortex. All right, I got 3
Help
today.
me.
Number 1, when you have a bladder infection, you're in trouble. Number 2, short and sweet, that one. Number 2, people in Athens rarely get up before sunrise. As we all know, dawn is tough on Greece.
Oh,
I like it. Nice little play there.
And very fitting, given the jokes. Number 3, the other day I tried to make a chemistry joke, but got no reaction. Got no reaction. Gentlemen, it's good to be back in the saddle. Happy to be
It's
here.
always going to be in the saddle.
It's true. We will be back. Thank you, everyone, for tuning in. And as we said at the beginning, at the onset, be sure to subscribe. Follow us on our socials, where we have super trending shorts. Thanks to Greg and his AI friends. And we'll be back next week, Tuesday, Wednesdays at 10 a.m. We record
Someday.
Tuesdays. Thanks, everyone, for dealing with us, putting up with us. Have a great week.
Thanks for tuning in, everyone. We hope you enjoyed today's episode. Please remember to like, share, comment, and subscribe because we'd really like that.